So markets are absolutely freaking out today, and I want to give you guys the latest. This is your headline. Fed holds rates, right? So that's your headline. Fed is holding. Three officials, though, dissent, favoring a hike, right? So it was either hold or hike. They decided to hold. And remember, this whole thing is all about confidence. And as we go through to what people are saying, ask yourself, do you feel confident in Warsh? Do you feel confident in the Fed? Do you feel confidence in the markets? It's all about confidence. Headline then, NASDAQ 100 enters correction. So we're selling off. S&P 500 falls after Fed decision. So that's kind of giving you an answer here. We're not feeling so confident. And then here in Asia, this would be the Korean markets, Seoul stocks plunge for a second day amid growing panic sell-off. And we're entering into day 3. We'll see if it keeps continuing. But this has been like this the last couple of weeks where things are absolutely insane to the downside. And let's listen to what people are saying. And again, the question is, do you feel confident?
I'm going to start with a quote from a late Fed chair. This one from Alan Greenspan. I know you think you understand what you thought I said, but I'm not sure you realize that what you heard is not what I meant. I don't think anyone really understood much the last 45 minutes, and the market right now is still trying to figure it out. The chairman talked about this market move we've seen.
What in the world? So that's how we're starting our discussion today of what the heck is going on.
Jim Bianco put out a great piece yesterday suggesting a rate hike actually would be good because it would calm the bond market, which could actually maybe even calm the stock market. Why were you looking for a hike?
The risk reward, Charles, would have favored the Fed saying they took back last December's insurance cut because they were worried about the labor market. Labor market clearly has gotten better. And the inflation outlook based on the official government data is more fraud. So from a perspective of
fraud, not fraud.
Well, yes, I don't think fraud. Yes, no, fraud.
Might have been a Freudian slip.
No, not at all. No, I meant what I said. So the point is that.
So that's the question. Are we talking about fraudulent numbers? Like they're kind of a Freudian slip in there. So there's that.
On 30s. That's not good. That is not the outcome people were looking for.
No, volatility, if you truly are potentially on the fence and are going to move, is one thing. But if you've got a parent who's saying, if you do that again, I'm going to turn the car right around and go home, and the kid keeps doing that, and the parent keeps driving straight to go to the amusement park, well, guess what? The kid's going to keep goofing around in the back seat, and that's what's going to keep happening. Because ultimately, if you don't believe that they're actually going to do anything, why should you start to prepare and price that in?
That right there, that's it.
So no one believes the Fed or has confidence. It's like the kid going to the amusement park and the parent keeps driving and threatening to do something but doesn't. So here's some other things that's going on, and we'll get into more what the Fed said. Meta's stock plunges almost 10%. Wow. On disappointing guidance, so not so great for the future, I guess, and dwindling free cash flow and not so great for the present. And we're spending all this money on AI that may or may never ever be profitable, but hey, everyone else is spending money on it and going into debt over these things. So I guess we should too, right? Set the idea. And this is then Google. Google goes cash flow negative for the first time, right? And I think this is since 2004. Again, more AI spend. So that's your biggest company. It's supposed to be the cash cows in USA. Are cash flow negative, which isn't great. I think you guys know this stuff. And then you got the whole situation in Iran. Trump says U.S. will give Iran a beating after surprise attack. So that doesn't give me confidence either. And oh, by the way, this is where I live, actually here in Busan, is our news. Busan reports highest temperature in 122 years. So I keep hearing this stuff like, market crashes is like the kind of a once in a lifetime kind of thing. We're getting weather at least like that.
Kevin, it's Kelly here. One of the economists I was reading has just suggested of all the task forces that Warsh is creating, there's not one to deal with the following possibility, which is a U.S. debt downgrade. The fiscal deficit situation, not great, worse than last year. Debt to GDP, not great, historical bads. What would you say about that? Is that something that the Fed has to react to? Is that partly why we're in the situation that we're in?
I don't think that any of us think there's any reason at all why U.S. debt should be downgraded. That if you look at for example, the reductions in government employment that we've enacted over the last year and a half, maybe 300,000 jobs down, that means that the long-run budget situation is moving in the positive direction, not the negative direction. So I think the Fed probably, if they were really worried about it, they might have had a task force on that. But the fact is that.
Okay. And remember back, my original question is, do you feel confident? Do you feel confident in the stuff that Hassett is saying? He's like, guys, we totally fired 300,000 people, and that's a good thing. I mean, it's great that 300,000 people are out of a job. Fantastic. And they're talking about whether or not the U.S. is going to get a downgrade. I mean, it's certainly a possibility if you're going to do deficit spending, to infinity, basically, and then continue this war. Remember, the military wants $1.5 trillion for for the military budget. It's the math doesn't work out, right? And then you get into the actual what the Fed said. And again, the question I ask you, do you feel confidence? Let's listen to what Warsh has to say today.
Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch.
And so then again, this is the question I pose to you when you see Warsh. Do you have confidence in the guy? Do you feel like, oh yeah, he totally understands economy. He totally cares about regular people. And it's funny, he had that line in there of like, oh, you've heard this one before, or something of that nature. And I don't feel confidence in them. And it was funny because he talks like he's going to be tough on inflation, but yet doesn't hike, right? So that should be the fundamental question is, okay, if inflation is indeed a real thing, like why aren't you hiking this time around?
Surprised by that? Are you disappointed in any way with Kevin Warsh?
No, Kevin's fantastic, but he's got a board. Yeah, Kevin's got a board. He's fantastic. He's a brilliant guy, smart. I know he'd love to see lower interest rates, but he's got a board, and it's a political board, and they want to keep rates up. But we fight through rates. We have the strongest investment ever made in a country, of any country. It was China about 13, 14 years ago. We have far greater, 19.2, even Jensen would say that's a lot. 19, and Jensen's spending a tremendous amount of money by hundreds of billions of dollars. He happens to be in the room. He's spending more than United, actually. Well, he's spending 10 billion, but Jensen's spending hundreds of billions, right? I don't know.
So I guess according to Trump, China's going to bail us out? Is that what we're talking about here? I mean, Trump says a lot of nonsensical stuff, and then I guess we're talking about how Jensen Huang and NVIDIA are going to build a bunch of data centers in conjunction with Meta and Google, who are cash flow negative. I think that's his line of thought.
It's a confusing one. Sometimes this is straightforward. The last hour is anything but. What's your takeaway?
Yeah, I mean, I think markets just don't believe them. The thing is, I do think that the Fed will that the data will ultimately bail out the Fed to some extent, because the market's saying we don't believe that the Fed is necessarily going to be hiking in September. That raises inflation expectations. That does exactly the opposite of exactly what Warsh had set out to do today. If we do end up seeing inflation data come in a little bit softer, that might bail him out. He's basically, rather than doing watchful thinking, he's really doing wishful thinking. If the data ends up coming in line with his side, this may all work out. But if not, this could end pretty poorly.
I think it's going to end poorly. That's my opinion. At the bottom of the screen, it says Treasury 30-year yield hits highest level since 2007. So it looks like we got a lack of buyers in the 30-year and also selling off. That's why you'd sort of have that kind of thing. Basically, the market's calling it out. We're worried about inflation. We're lack of confidence in the Fed.
Said repeatedly, you have no tolerance for inflation. And yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation.
So the question is basically, you act like you're really tough on inflation, right? And if so, shouldn't you be raising rates to get inflation under control? Okay. And so we're going to see what he says as a response.
And what you plan to do about it.
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses: impatience. Deliver it already. This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago.
Okay, so I definitely don't have more confidence. And we're talking about magic wands here. The whole thing is bizarre. He comes across like a politician to me more so than, say, Fed Powell, which I've been watching, and kind of the way in his language. The bottom of the screen, it says, we'll be watching inflation data over the period ahead. And before, actually, I was seeing, they were actually saying here, yeah, I asked for a good family fight and I got one. So these are the quotes from our Fed dude. And again, do you feel confident? Remember, this whole market, it's all about confidence. Do we think things are going to be great? Are you going to get a credit downgrade?
He was really happy to have the input of the market, but he wasn't outsourcing the Fed's decision to the market. He talked about these 4 goals, these deep questions that we talk about every single day, but gave no conclusion as to direction. He talked about a divided committee as not divided, but united in a determination to bring down inflation. And this market said, you know what, we're going to call BS on this, and you're not going to hike rates, and you're going to try to jawbone us, and you think that we're going to do the job for you. And so they're calling the bluff.
So talking about basically market reaction, doesn't seem to have any confidence in Warsh. Let's see some more here.
How does that help me?
Well, then you don't do anything. And then inflation is never going to get any lower than where the Fed wants.
Well, how does it get lower without the hikes? So that's what I mean from a layman's point of view.
So it's the old adage of the Fed leaning against the wind and tightening monetary policy, and it works in strange and mysterious ways where, we don't know exactly how high the Fed funds rate has to go or how it exactly works in the economy. But, Charles, a 3 5/8 funds rate isn't holding anything back at the moment. So that's clearly not, for me, the right level.
Well, you see fragility in the economy. You write about bankruptcies and all this kind of things all the time.
The bankruptcies are undeniable that we can see. All that we can see are the bankruptcies in the visible U.S. economy. We know that those are at a 15-year high. S&P reported that last week. What we have no idea about, though, is what bankruptcies are in the private credit market. We have zero idea. So there is fragility.
So now we're talking about soaring bankruptcies. That's essentially where our markets are at the moment. And it may even be worse if you look at private credit. Great. Fantastic. And then pile that onto what's happening in Asia. Again, we're crashing over here. You pile it onto what's going on with all of the AI data center spend and that sort of thing. Free cash flow negative. You pile that onto what the Fed is doing. I don't feel any confident of that. And then you get the Trumps, and they keep pushing more war. So all these things are converging, and then there's just too much leverage out there. And ultimately, I think this is a house of cards. That's just my opinion on this stuff. I mean, I think it's obvious as we go through these things, but I want to hear your thoughts. So that's my thoughts on this. I'd like to hear yours, and I'll catch you on the next video.